What's going on, everyone? Mic check, 1, 2, 3. Hello. Welcome to Our Stock Trades. How's everyone doing this weekend? Hey. All right, we're making a lot of videos because you know what's coming up next week. I want you to share this video. There's a lot of important information to talk about in this video. You guys got the music. All right, there's a lot of information to talk about. This is a very serious video. All right. Lots of stuff is happening right now in the background, and we're going to be talking about a lot of information here. Definitely, a lot's going on, right? So definitely share this video, and let's get started. All right. So, the title of this PowerPoint presentation is Clover Got It Right, right? Clover got it right. So what I'm going to do first is I'm going to talk about the economics. But just to give you a little sneak peek of what we're going to be talking about is some important maneuvers are happening from the technicals right now. But first, before we move to this, we're gonna move on to we're gonna come back to this. Okay, we're gonna come back to that slide, and I'm gonna analyze it. Okay. Hello. All right, guys. So check this out. So, what are we looking at here? We're looking at productivity and labor costs. Why am I talking about this right now? How is this in relation to Clover Health? Like, what? Like, am I going crazy? Right? Am I going crazy? Well, the thing is, ladies and gentlemen, is that as you can see, productivity has started to increase. Right? Productivity started to go up, and we've noticed this productivity increase since 2016. Productivity was pretty stagnant going back and forth after the great financial crisis. We got that boom, and we got this kind of a taper. And something happened in 2016, processing, Moore's Law, whatever have you. OpenAI came into effect in 2018. Lots of investments happened in technology. And we were set to explode in the roaring 20s. I mean, I don't want to get political, but this is what Donald Trump was essentially banking on. He was banking on, having the best economy in the history in the United States. And we were on verge of that. But then the COVID-19 pandemic destroyed that. But what we're seeing now is something incredible. We're seeing productivity cost go up. Sorry, productivity go up, and then labor costs go down. You see, if I were to explain to you something, like if you pay your workers more, they get more wages, inflation goes up. Okay, these are all inflationary, right? And the Federal Reserve doesn't want inflation to happen. But do you know what the elixir is? The stem cell therapy? The medication for the economy to soothe the souls of the economic catastrophe that we were in? And the answer is productivity, ladies and gentlemen. Productivity, if you go to any economics class, productivity is the elixir of economies because it's actually deflationary, okay? It's very deflationary. And this is what, you guys, you might not like her, but this is the truth. This is what Cathie Woods was basically saying when she was talking about how in the 1920s, we had the roaring 20s and we had a lot of technology. The steam engine came about, right? And if I may, I'm going to just give me one moment here. I want to give you an image, and I know it's going to delay like 10, 15 seconds, but if you could just stay with me mentally, this image will actually change the way you look at life. If there is an image, it's this. And if it doesn't change the way you look at life, then there's something wrong with you. Okay. So let me go ahead and open up a new desktop because I got so much shit going on here, guys. Let's go here, open this up, and I want us to look at this image. Okay. So what do we see here in this image, ladies and gentlemen? Big changes happened faster than predicted. In the 1900s, we had one car surrounded by a bunch of horses. You see, these are all horses. Let me zoom in. That's a horse. That's a horse. Aren't they cute? Let's see the little ears right there, right? But look at that. Within freaking 13 years, there's only one horse. That's a horse right there. That's a horse. I know it's hard to say, but that was a horse. Within 13 years, the whole street, that's this freaking street, changed from horses to freaking cars in 13 years. Let me tell you something. Do you understand what's going to happen with artificial intelligence technology? Do you understand what's going to happen to the reality in which you live? Sadly, the people watching this, some of them are going to lose. Some of you guys might lose your jobs because of AI. And yes, I'm speaking to the doctors, especially in primary care. That's what they're gunning for. Right? So there's a lot of things that are going to be happening right now in the next 10 years. And this set the stages for the roaring 20s, where just everything just became so productive. Productivity is going to go up because of AI. And this is exactly why Palantir is trading higher than the intrinsic value. People are banking on this pattern. Okay. So if you look at the consumer price index, look with obviously, labor cost in blue here, you can see it's going down. Look at this, right? I'm going to pull a President Joe Biden here. It's going down. He says the most important things in a low tone voice. It's going down, right? So there's a sorry guys, there's a little ripple. How you doing, John? How you doing? Hello. There's a little ripple that might come up, but again, that's the whole point of holding the federal funds rate and trying to act like you're hawkish when in reality you're dovish as hell. Okay, so if you look at the non-farm business productivity, that's what we're looking at, and this is what I'm talking about. So in 2016, okay, this is the productivity. This is like how productive society is, right? This is from the Bureau of Labor Statistics. And if you look at it, this is what Donald Trump was banking on. 2016, it was flying, and it just like literally soared. It soared, but then all of a sudden the pandemic happened. And one of the reasons why it soared is because just crap ton of money happened, but then all of a sudden the pandemic crashed everything. The pandemic destroyed everything, right? And all of a sudden now we're getting back on trend line. We were actually supposed to grow this like this. Our line was here. We were supposed to grow, ladies and gentlemen. We were supposed to grow like this. Okay. What I think is going to happen is we're going to shoot high right now, and we might actually start growing like this. And then sooner or later, I think that's what's going to happen to productivity. Okay. So what does this translate? What does this translate? This translates into money. It translates into money, ladies and gentlemen. This is straight hard cash. Why? Because if things, that's a really effed up smile. Because you know why? Because his tongue's sticking out. There it is. All right. Changed it. All right. So this is straight hard cash. Okay. Let's go ahead and okay. So we're going to keep that beautiful smile there. All right. Take a screenshot. Okay. So anywho, if you look at the most recent S&P 500, it actually bounced right now. The S&P 500 bounced off of this beautiful line. You can see that this is some really, really nice technical analysis. You don't have to be, Dr. Spaghetti when it comes to this. You got your 200-day, you got your 50, and guess what's going to happen right now? It bounced. All right, and this may be the bottom for the S&P. Okay, now if you look at the 10-year Treasury, so I'm going to ask you, why do you think it bounced? I'm going to ask you, why the hell did the S&P 500 and stocks bounced? Look at the 10-year Treasury. Now, again, listen, guys, okay? We may not have the fantastic, beautiful parts of, making this channel look all nice for your eyes and, Mr. Beast type of, Graham Stephan's videos. We don't have that, but you know what? I know I have the content, right? Because I know actually what I'm talking about. Okay. So if you go ahead and if you look at why it bounced, look at the Treasury, the 10-year Treasury yield. This is the yield. This is the percent yield. It dropped. So ladies and gentlemen, let's go ahead and let's do an example problem. Okay. All right. Let's say, for example, I have a dividend stock and I bought the dividend stock, let's say at $6. That's a really fucked up $6. I bought it, excuse my language, I bought it at $6. Okay. And then it gave me 5%. Okay. It gave me a 5% return. Okay. Let's say, for example, the stock price changed and now it's $12. Okay. What do you think is going to happen to the return? Is it going to go up or down? Of course, the return is going to go down. Okay. You have less of the stock to pay you less of the dividends. So if the Treasury yields went down, what do you think happened to bond prices? Ladies and gentlemen, bond prices actually went up. They went up. Okay. And let me ask you something. Who do you think was shorting the bond prices? Bill Ackman was shorting them. But you know what he did a couple days ago? Bill Ackman says he covered his short bet on U.S. Treasuries. Bill Ackman covers bet at Treasuries, says too much risk in the world to bet against bonds. Bill Ackman stops betting against bonds, and I'm going to tell you what it means. Again, when bond prices go up, the yields go down. Just like when stock prices go up, the yield goes down. There's a reason why AT&T and Verizon is paying a lot of yield right now, because their stock prices have dipped. What Bill Ackman initial hypothesis was that, bond prices are going to continue going down, and then yields are going to continue going up because of the bond vigilantes. Okay. But what's interesting now is he removed his bet because there's a lot of uncertainty in the market. And when there's uncertainty, people flock the bonds. If you have more demand, then what do you think is going to happen to the price? It's going to go up. Okay. And if the bond prices go up, what happens to the yield? It goes down. And if you don't think it went down, let me give you a shorter view. Boom. Look, you see this drop? That's a pretty significant drop, ladies and gentlemen. Bond prices went down. And if you look at it here, and if you look at follow the dates here, this is October and November. You see how it dropped right here in the beginning of November and the end of October? Look at here, ladies and gentlemen. You see how it rebounded? Guys, this all comes together. This all comes together. And then right here, this line is called the mother of all support. Ladies and gentlemen, for all the neurosurgeons that are watching, I know I have a few. Ladies and gentlemen, what we like to call this is we like to call this a fusion, a lumbar fusion here, right? The whole world is basically holding on to this thread right now. The whole world is hanging on to this right now. Okay, all right. That's the mother of all support lines right there. Look at that. Look how beautiful that is. Okay, all right. Let's continue. Okay, so we talked about Treasuries. We talked about Bill Ackman. And now let's go ahead, and I promise you, let's go to the Clover Health analysis. The black line here is a 250 okay. The black line is the 250 EMA, right? The yellow is the 120, the green is 60, and the red is 20. As you can see, this was, you remember I told you I made a graph not a while back ago, and I said we're either going to go above our above the simple moving average 200 either in July or November or February. I gave you 3 months. And if you don't believe me, we can go here and we can track it because everything's tracked. Let's go ahead and do this. And I'm going to go to this one here because there's not a lot of posts that happen here. Let me go here. Let me see if I can find the post. Let me go ahead and, because it's actually a good graph. I use the systems of equations, stuff you learn in high school algebra, but the teachers don't even know how to use it in to make money, because that's the world we live in. They teach you a bunch of stuff. They don't even teach you how to use it to make money. See if I can find it here. Un momento. I published this way back. I think it was in the summer. Let's see here. Un momento. Any images? We're 7 months in now. There is it here? And then the image looked like this. If I can't find it, I'm sorry, wasting your time. We're gonna go back to the power. Yep. We're gonna get back to it. Whatever. Anywho, I drew it and it's falling right in line. Okay. And what we're basically seeing right now is we're seeing that it's passing the 250 EMA. Okay, we are doing great, ladies and gentlemen. We're about to rally. And guess what? Next week is earnings. We're falling right in line. And for all the amazing people that took advantage of this, oh man, you're an OG. You're an OG. Now, we're going to turn our attention to quantitative analysis, or quantitative analysis. Yeah, to all the hedge funds, institutional investors, and venture capitalists that are watching, screw you. We have access to this information. Okay. And we're about to do some quantitative analysis. So put on your thinking caps, ladies and gentlemen, and let's go ahead and think. All right. So the beautiful part about quantitative analysis is we can take large corpuses of data, and instead of looking at the actual numbers, the negatives, the positive, you can look at the colors and be able to ascertain what's happening with the company. If you go ahead, we know that this is 2020, 2021, 2022, and then now. So we're going from the past to the future. And as you can see, Clover Health in 2021 was bad. And again, it was the repercussions of COVID and the basically starting revelations of potential inflationary costs, right? And we already knew the recession really happened, the tech recession happened in 2022. But I want you to focus on the gross margins here, ladies and gentlemen. You see how it went from like literally red to being green? You can see that there's more red on this side, which is the past, than this side. Ladies and gentlemen, that's actually really, really good because we're heading towards profitability. We're getting better EBITDA growth. We're getting better book value, not better book value per share, but we're getting to a better profitable metrics which will improve these, right? If you look at all this, ladies and gentlemen, we're slowly getting better, okay? We're getting better as a company. And guess what? In the next couple of years, dude, who knows? Next year, this is all going to be green, okay? And the fundamentals will follow. The fundamentals will follow. Another thing is, again, this is from the past and this is from the present, okay? Ladies and gentlemen, look at this. By the way, this is quarterly results for gross margins, net margins, FCF margin, pre-tax profit over EBITDA, not EBT margin, operating over EBTI margin, and EBITDA margin percent. And you can see basically it went from red, which is negative, and look at this, it's still negative, but it's improving. See how powerful quantitative analysis is? You don't want to go in the other direction, right? It's getting better. It's getting better. Okay. All right. So what we're going to do now is we're going to look at the revenue growth now for the past, the only couple of years of data we have with Clover because it was a SPAC. I don't have 10 years of data, right? We're working with small amounts of data here. But if you can basically see here, if we take the sigma, which is the sum of all of these growths, we get around 300.51%. And if you take the average of that, you get 100% growth if you were to average 2022. Obviously, they had to decrease because of, profitability. But again, I have to remind you, Clover Health is a growth company, ladies and gentlemen. It is a growth company. It is not a value-based company. There is value into it, especially now, right? But it's a growth company. And I believe that if you were to have this average of growth, because I don't think it's unrealistic they are going to have some quarters where they grow like this, but if you were to average this growth, it's going to grow anywhere between 45 to 50%. And if you think I'm full of like SHIT, well, if you go to SoFi really quickly, SoFi is growing 25% plus. And if you look at the past revenues, they grow 40, 50%. They are growing at that level. Okay. We're going to be covering SoFi soon because they're hitting some important, they're starting, I'm starting to like them now, especially with what I'm seeing, which we'll go into later. Okay. But overall, guys, what we're seeing here is we could potentially grow anywhere between 45 to 50%. Okay. I'm talking about once inflation goes down, once the Federal Reserve cuts interest rates finally to a point where it's at a good position. And then, once, growth stocks start out competing value stocks. Okay. So, we're going to go ahead and do an intrinsic value calculation with this particular growth, just so we can see potentially, what are we holding here, right? Why am I wasting my time on this company? Why? Okay. Okay. So, this is a video that one of our members posted on our stock terminal, building an impactful insurer tech insights. It's a channel, but anywho, it has only 771 views because, again, this is how life works, right? People don't look at this information. Insurance is boring, okay? 3 years ago, Vivek said that he believes in 2.5 to 3 years, which is now, he believes that there should be some peer-reviewed data that basically shows the impact of Clover Health. And guess what happened in the past 3-4 months? They came out with some peer-reviewed data. Ladies and gentlemen, they are on a mission. Okay, and it's a checkbox. There are a couple of wrenches that came and they're dealing with them, but overall, they are in it. They are in it. Okay. All right. So they're in it to win it. So let's do some intrinsic value. So we already know that 5% of 2 billion is approximately 100. So we're just going to put 100 here. Okay. Doesn't matter what year, it's going to take the average of 100. Okay. Then we're going to go 10 years into the future. So from 2022 to 2023, right? And then we're going to go in and we're going to type in, we're going to type in 50%. Okay. Then we're going to type in 477. Obviously, they're not growing 50% right now. That's not base reality. But again, they are going to be increasing the revenue once they turn on the growth machine. And this is the price that we should be looking at. This potentially can become a $76 stock. Ladies and gentlemen, this can potentially become a $76 stock. Now, again, let's assume that let's say the discount rate, because it's still going to be growing very quickly and they haven't, they're probably going to be burning. Let's put a 15% discount rate. If we put a 15% discount rate, we get to $35 for the bull case. Guys, $35 is some good money. That is really, really good. And again, that we could see that within the next 5 years. Okay, what is it trading at now? What was it, $1.08? What, $1.08? That's a 3,174% return. If you don't believe this is possible, guys, look here. Look at Enphase. Remember, I put out a sell rating for Enphase, and I said that, hey, I believe, we hit our 250, and everyone's like, no, it's going to grow more. It's going to grow more. Yeah, it certainly did. It definitely grew after my 250 or 225. Yeah, it grew, I missed out on 20% or 30%. Okay, that's fine. All right, whatever. Look at it now. Okay, I'm going to be doing a reevaluation on this. But again, price is what you pay, value is what you get. This was overvalued. Okay, now look. Just so you see. What percentage is that? That's 28,000. Son of a beeswax. Hold on. There we go. 80 cents. 72 cents, even better. Look at that. That's a 46,566% increase. I mean, what is that thing? If I had like an editor, I would literally tell him to put the little thing where it says, you know what, I'm going to do it right now. I'm going to do it right now. I know it's going to be annoying. Hold on. Let's see. Hold on. Here it is. I don't have an editor, but I'm going to do it for you guys. Here it is. Here it is.
You got me. Power levels 8,000. Huh? Now it's over 9. Power level. It's over 9,000. What, 9,000?
Okay, there it is. It's over 9,000. Okay, that's for definitely. It definitely is. Okay, so what I'm gonna go ahead and do is just put this back right now, really quickly. Okay, and go back to Enphase, guys. Look at this. We're talking, over 40,000% growth. 40,000, guys. I know this may sound unrealistic, but guys, this is just 3,100. It's not 41,000. Could it potentially become that? Well, yeah, it could go to $100. Definitely. It could become a 50, $60 billion company. But first we would have to look at Stripe, which is what Chamath was saying, so it can have a base value. But you see what I'm trying to say, guys? All right. So let's give an example. There are some, we have a lot of folks on our Discord. I'll give you an example. Person who has, let's say, 250,000 shares right now at $35, easy. Look at that. 8.7 mil. 8.7 mil. Let's say someone has 10,000 shares. Look at that. That's 350,000. Obviously, it's not enough to be able to be financially independent. But if you get something like a bond, or see if you can find dividend stocks to pay you, that'll get you $1,458 a month, right? I know that's not a lot, right? But again, this is like dividends. But this is why you got to keep. You got to keep. If you got 10,000 shares, you got to keep working, right? You got to get right. But ladies and gentlemen, do you see the power of this? Okay. So I believe productivity is among us. And yeah, we are gonna do well. So anywho, if you enjoyed this video, please give it a thumbs up. We do have our Black Friday sale. Please use coupon code Black Friday to get you $1,000 off. It is literally 50% off. I forgot the percentage point, right? Because it was over 9,000, right? This is lifetime access to everything we have, all of our data, lifetime, all improvements, all upgrades, everything we offer, lifetime access. You can find it at allstocktrades.com. Again, we have been featured on Bloomberg, Yahoo Finance, Benzinga. Our platform does work. It does democratize financial information. And, it's pretty much a cheaper version of what you can find. You can calculate everything we have and go get it individually, and you'll be paying over thousands of dollars every month. I promise you that. But you have access to the data. And that's the beauty of this platform. And you have it a lifetime. So the deal is in the pudding. We also have our sponsor, Affirm, as well as PayPal, that has helped us with the financing. So if people want to finance this, go right ahead. Prices will increase, and very excited. I appreciate it, man. I appreciate it. And I hope that, again, it was a delayed over 9,000 little video. I don't have an editor to help me right now, but maybe in the future. But I'm trying, guys. You can see it. I'm really trying, right? I'm really trying to help. And I gave a special message to the Reddit page yesterday. I love you guys a lot. I'm just sick and tired of the small guy getting fucked. Okay, I'm just tired. Okay, I'm tired. Right? I'm tired of the small guy getting screwed over. Okay, like I'm tired of it. Right? The rich get richer. They get rich off of the backs of the American people. They try to bet against America to make money off of America, but that only is going to last so long because you can't bet against us. You can't bet against us, okay? Because we built this country. The middle class built this country, okay? And it's time for us to finally democratize financial information. You think back in the day, in the 90s, this was available? We had dial-up internet speeds. I mean, computers weren't even there. But let's say computers were there. Windows 95, one of the most trashiest computers I've ever used. Whoever understands it, Windows 95 and Windows 98, it was okay. Do you think my dial-up internet speed was able to reach you on your phones right now? Reach you on the computer screen right now? Of course not. Do you think I had the computing power if I was alive? I was alive in the 90s, but if I was like caught, if I had this technology, you think I was able to do this? Excel wasn't even created, I think, back then, right? Like, you think I was able to do this for you guys? No, it was never. If you look at the intrinsic value calculations and backtrack them in the 90s, oh my God, guys, it was so easy to make money back then, especially if you had that technology. We're finally here now. We're here. We made it to the promised land. We have access to the data. There's nothing separating us between Chamath and us. Yes, they can get their little insider information. Yes, they can have, but it's okay. It's fine. Because every 10 years, 10 to 15, every 10 to 15 years, we get a down market that goes crazy. And they get washed out, and they have to, make their moves public, right? With the SEC 13F and 13D filings, right? And it's fine. We can get that data, and we can get stocks like this, which is a gift, lower than what he purchased them for. And we're winning right now. We're winning. Okay. He needed a liquidity crunch. He got screwed over, right? Because he got margin called pretty much. Okay. He got margin called. Okay. So, this is finally our time, right? And everything's backed by data. Everything I showed you guys in this presentation was backed by data. I mean, look at this. Everything was backed by data. There isn't anything does not have data. And if you see something that I got something wrong, if you see something, let me know. Let me know if I got something wrong. I mean, I'm only human, right? And again, this is not financial advice. This is an educate. Again, I'm trying to educate the masses. I'm trying to get people out of poverty. Go walk in California. That's supposed to be liberal. Go walk to the beach areas. Go see those multi-billion-dollar houses. Go to Malibu. How do you think these mother flippers are able to afford this? If you work a $50,000, $60,000 job your whole life, you will never be able to afford those homes. Okay? You have to increase your income, but guess what? You have to understand Wall Street. You have to understand how this works, because that's where money is made. That's where money is made. Go look at the senators, the senator and governor that promised you how they're going to help you. Go look at who their sponsors are. Go look at how many hedge funds support them. Go look at how much insider trading they've done. Go look at their portfolio, their buys and sells. Oh, wait, you have access to that in our platform in an easy, democratizable way. All right. No one cares about that. What I've realized in this world, nobody cares. Okay. Nobody cares. You think these politicians give a shit about us? They don't give a shit about us. They don't care. They spend our tax money like it's parents' money, and we don't have control over it. There are people running the deep state that haven't even been voted in, but they just basically decide what this country does. Okay? Trust me, they could easily fix the problem. They could easily fix it. Why are we giving billions of dollars to other people, but yet we still have a homeless problem in our country? Why do we have an opioid epidemic, and why did it take so damn long for this opioid epidemic in Purdue Pharma to get cracked on? They paid off the guy from the FDA. They gave him a $400,000 plus drop, and he screwed over millions of Americans. You understand what I'm saying? No one, like what Tupac said, they don't give a F about us. They don't care. Okay? So it's up to us to read. Just like when back in America's dark earliest days, when slaves had, they had no rights. They had a verbiage. They said, each one teach one. Whoever had the privilege of being able to read and speak had a moral duty obligation to teach the next generation and his peers and his family how to read and speak. They had an obligation, and this is your obligation now. For all the mastering stock market students, this is your obligation. Once you learn this information, you teach it to your children. You pass this on, because guess what? Wall Street doesn't change. This information will not change. Trust me. You know what will change first? The freaking 250-year-old plus Constitution will change before this country's way to crack the backs of the common American people. Let the Constitution change first before that changes. This is the secret of Wall Street. This is the secret spice. The intrinsic value calculation, the fundamental analysis, the peak of what Warren Buffett's mentor taught him, Benjamin Graham, of The Intelligent Investor, which now we create a remodernized book that is in the top 100 bestsellers on Amazon and stock market investing. Okay? We're going to continue working hard. We're going to continue putting God first in everything we do, and we're going to democratize this whole damn thing. All right. And for all the people that lost their lives, for all the people that did suicide, that got into drugs and alcohol after the great financial crisis, I feel sorry for the people that literally went through that. It is not your fault. It is the fault of the greedy. Okay. So, it's a pleasure and honor to serve each and every one of you. And that's all I have for you guys. And I'll see you on the next one.